Good afternoon, traders. This video is for April the 1st, 2011. U.S. stocks gain after multi-year Dow Jones high on jobs optimism. Switching to the Dow Jones chart right here, which closed at 12,376, peeking its head up to 12,419 as the high. $12,391 was the level that we needed to surpass. With a hold over that, new things were possible. With the hold under that, there could be a little bit of consolidation. Whether we go higher or lower, time will tell. But the thing is, the Dow Jones is certainly outperforming. Next, we have the Russell. Almost to an all-time high of 856. Check this out, guys. We hit that back in 07 right before the pre-collapse, and I just put a video out today that shows you a little bit on how the collapse took place in the housing market. So we went from 856 all the way down to a low of 342 when the March bottom got hit. With all the government money being put into place, certainly the Russell's outperforming. A couple things that could happen next week. We could run up to the 856 if traders come in on Monday and start buying. We know a lot of this rally came from window dressing. Funds putting positions on and adding to positions going into the end of the quarter so that their investors could see nice gains, and they just go with what's been working. Also, another reason the market went up is so many people missed this entire rally and they were just waiting on a dip to put money to work. Well, they certainly got that. Now, there still is a lot of bearish optimism on the plate. This is purely a pessimistic rally. Whether you believe in it or not, the gains are really there to be made, and I actually day traded and made some money this last week. But as for swing trading, I closed out a lot of my long positions a few days ago, which was a mistake. I thought that when we sold down that one day right here, that we were going to have more downside. Well, they quickly reversed the trend and rocketed back up. So what we're going to look for is a move back down to this prior high at 837. Maybe consolidate here. If we get below that, maybe you can see a little more downside. Another thing I wanted to point out, I'm looking at the SPX cash index, which I track, but I mainly follow the E-mini S&P futures. Now, the low we put in on the cash index was 666, and I'm not sure if everyone knows that this was the March low on it, but I just think that's a really weird number that they bought the market up at. I just wanted to point that out. Alright, next we're looking at the E-mini futures. And you see down here the volume's actually starting to increase over the last couple days of this rally. We were skeptic about what was going to happen going in here because this was on declining volume and it was below average. It still is below average, so there is a chance that the market could still go down next week. I think it's going to be a tug-of-war match between the bulls and the bears. Are they going to run the S&P back up to the 1343 previous high, or are they going to consolidate it around the 1332 to 1339 level and try to still put in that lower high? We're still looking out, guys. Right now, long-term trading, even short-term swings, I'm being very careful. This is just what I'm doing right now. Day trading is really in your favor. Buy strong stocks on the dip. Speaking of strong stocks, how about that Joy Global? I absolutely love this company. If you want to learn more about it, go to joyglobal.com. This was actually one of the stocks that I thoroughly researched about a month ago, and I saw them report a killer quarter on their earnings. They make mining equipment, coal equipment. It's all proprietary patents that they have on all their stuff, and it's a phenomenal business that they have, and it's absolutely booming. So you see them running up over the 100 level. It seems that 100 is always a level that stocks need to get past, and just like Chevron, for example. Sorry guys, I'm jumping all over the place, but I want to get everything in this video. Look at Chevron. Once we got over that 100 marker, you see the buying come in, and a lot of people are saying that they don't want it because it's too high. Well, there still are people putting in money. Now this alone, this could be a bearish candlestick coming in, and a few other refiners are actually looking a little bearish here. Rig, for example, a buddy of mine just bought puts on Rig. Now I'm watching the 79 level and seeing if it's going to hold, or if they're just going to hold it below it and then drift down to the 76 to 75. You see a left shoulder, the head, and the right shoulder forming. This pattern could play out. Also, we just had news on Friday on Rig. They came out and they said that the workers are unwilling to testify in Congress about the disaster and the influence that they had in the participation with BP. So we're going to see, this could be interesting. One of two things. I don't know how it's going to take the news. It kind of sounds negative, but you never know, guys. They could gap it up, and if they gap it up to 80 to 81, that's probably where I'll look to start taking a short. Now looking at crude oil. Volume starting to appreciate here. And the trade has been simple. Above 95, get long to 100. Above 100, get long to 105. Above 105, get long to 110. And that's what's going to keep happening, guys. Pure bullish flags all the way through. And they're buying every chance they get. They want to put money in their pockets and take it out of ours. Next, we're looking at RBOB. And this is how you tell what the prices are at the local gas pumps. Alright, so we have 316 here, right? I already posted in a previous video the gas map, but if you need to see it again, here it is. I live in Florida, so 52.8 cents tax on my gas. So we go over to RBOB. We had 352 to 315. That's the average. 367 per gallon. And you can pretty much tell if people in your area are price gouging or not. A lot of it has to do with supply and demand, even with the local retailers as well. So keep watching this, the gasoline futures, as long as with the crude oil, as well as the ICE Brent. Next, we're looking at the Wilshire 5000 Total Markets Index, and not every software have this. So luckily, Thinkorswim does, because I track it very closely. What it is it's a index comprised of 4,100 components, excluding the OTC small cap stocks. And that's a large weight. The Russell 2000's a good way to track the market. But here, it kind of tells you the total what the large caps, mediums, and everything else is doing. And this one hasn't approached the 14,028 level yet. We're still under it. There was a little bit of selling that came in after midday, and the reason for that is still people do not want to take positions going into the weekend just in case there is bad news. A lot of people are still skeptical. Even though you've seen this rally and this participation in the market, a lot of people are weary that there's still another leg coming. It's just the overall gloom. And I'm sure you guys feel it as well. You can't be so confident going into this rally when Japan is still coming out with the negative news. We have a couple wars going on, and you have the Federal Reserve still talking about core inflation uprising. Now last week on Friday was actually the first time I've seen this in a while. There were 29 downgrades and only 8 upgrades, and that's excluding the new initiations, which were favoring the downgrades as well. So this is something I tend to watch every single day, and you guys should too. Now we're looking at all the sectors and the performance over this last quarter. Laggards were consumer goods and financials, which we'll discuss in just a moment. The leaders were the conglomerates, the industrial goods, and the basic materials. Guys, I really love when a new quarter comes into play. A few reasons. One, we have new earnings coming out. Two, whether you had a bad month, a bad quarter, a bad week, whatever, it all gets reset here, okay? This is second quarter living. This is the chance that you have to make profits and to be right. So personally, what I do is I look at stocks going into this weekend and throughout the week, of course. And I look at stocks that I'd like to hold for a quarter. I like stocks that I'd like to hold for a month, like to hold for a week, and like to hold even shorter than that. And what I do is I find the very best stocks, and I come in Monday morning. If they're doing what I like, I enter the position. Guys, the only way you could get better is if you trade. You can't be scary. You have to put your money to work, even if it's a small position. Just like anything in life, an example that I use is, say someone is making lasagna and they make it, one time they mess up, but every time you do it, you get better. And sooner or later, say you do it every single day, you trade every single day for a whole quarter, and you bake lasagna every day for a whole quarter. After that quarter, you're going to make the best lasagna in the whole city. And so as long as we're adjusting our risk properly in these markets, whether you're long or short, you can make money either way. You're going to be profitable at the end of the day. If this is what you want to do, then you give it 110%. Okay, sleeping comes last. Everything comes last until you achieve your goal, and then you can enjoy the finer things in life. Okay, so I'm looking at Goldman Sachs right here, one of the stock that looked compelling to me. We hit the high at 175 here along with the market, and then we've been drifting lower ever since in this channel. And it's been beautiful if you've been trading it to the short side. Now we're in a little consolidation area, mainly right here. And what I'm looking at right here is we came down to the 200-day moving average 2 times. Okay, we're holding a significant level at 157.25. We put in a higher low. Now we're coming back up to not only the descending trend line, but the descending channel that dates back even further than January, late January. Also, we have this long-term trend line going back from last year, still intact, and they're trying to get over it. What I'm thinking on this trade is if Monday we come in, we gap up, and then we pull back a little bit, I might look to take a long. The level that I'd like to get long from is 159. So if we get to 159 on Monday, that's where I'll probably enter my position. Now my risk parameter is already defined. I'm not risking a lot. I'll risk maybe 50 cents on this trade before I cut it. And let's just say worst case example. Alright, so anyways, if that 158.50 level fails, we're going to look to get long right above this 157. If that fails, I'm done with the trade. A lot of times, if I like a stock, it pulls back, I get hit, I get stopped out, I'll enter one more time, and if I get stopped out that time, I'm done with the stock, I wash my hands and I move on. Next, looking at Mosaic. Draw your price level here at 79.48. Just put 79.50 to make it simple. That's the level we're watching. Mosaic reported $1.21 compared to $1.08. I've been in favor of this stock for a long time. I know everything about this company. We're still above the 50 on the 1 hour chart, which is at 79.10. We put in a lower high going back the last couple of weeks, and it still looks good. But we did have some trouble holding over 81.39, and we do have a descending trend line that's on the daily chart. It's not real important right now, but if we get over the 81.39, we'll start drawing 82.5 and then try to get up to 83.97. So this is another one for Monday's watch list. Now going back to the financials, things will start getting interesting here. Since they've been a laggard and the market's been moving up without them, if they could get a boost, that could bring the market higher, guys. Now what's it going to take for the financials to start going? Well, we look at JP Morgan here for that. Why JP Morgan? Okay, JP Morgan is the one that's going to approve that bridge loan for AT&T to buy T-Mobile. I think it's $19 billion bridge loan. Now, the federal regulators still have to approve that. And if that happens, that's going to prove confidence for the banking industry. Kramer's coming out saying buy JP Morgan. A lot of other analysts love this stock. We see the all-time high is 67.17 here. We've been consolidating for a while. We're above the 40.98, which is the 50-month moving average, what all the institutional investors watch. We came down, we didn't even sell to the 100 during that dip, and it was bought aggressively just like everything else. Now we have a bullish pattern forming right here. So here we have the descending trend line that we broke out of. All the moving averages are ascending here. So if we get past 46.57 on the 1 hour chart and you see us approach 47, 47.28, a lot of the other banks are going to start moving up. Another great bank is Wells Fargo. Keep that on your radar. And if you guys like these smaller banks, a lot of people like Citi. Citi's doing that reverse stock split. Keep them on your radar. Alright, I'm going to end this video right now, guys. Enjoy your weekend and good luck trading next week.